Okay guys, so I wanted to make this video first of all because one of my friends asked me, and I also wanted to share with you a little bit of what I think about STDV, and this tool, man, is so crazy. This Fibonacci STDV is so crazy. It's warm that actually made me understand how to use it, and once I know how to use it, bro, it's so powerful. Okay, so here is an example on the 30th of July. So the bias on that day was bullish, as you can see. We are pretty bullish. We had this liquidity. Wait. We had this liquidity, so this is a London sell side liquidity. We had this one, okay, and we had this one, which is a London buy side liquidity, okay. So these were the main draw on liquidity that I wanted to see. As you can see, we kind of accumulate on the Asian session here. On the London session, we manipulate under these lows, okay, and then we rotate and we take liquidity above here with this candle here. So once I understand this, I'm scaling down even more, and as you can see, we have this move right here, which is the manipulation move. So you can draw from the bottom to the top of the manipulation. Wait, I'm going to do 1 minute. It's going to be more clear. Yeah, it's this. Yeah. So as you can see, we had this liquidity here resting above. We manipulate above here. So you take the low of the manipulation to the high, like this, okay, and then you have multiple levels which are here. Because we are bullish, we want to see these levels get taken out to then continue to the upside, okay. That's why I'm only interested into this level on the downside and not this, okay. So going into pre-market, as you can see, we accumulate pre-market. We also generate sell-side liquidity here. We have this London low here, and we had an hourly fair value gaps. I'm gonna mark it out. We had this hourly fair value gaps here, like this. Okay. So markets open. We clearly see the manipulation leg here to the downside, and which is absolutely crazy is that the price goes perfectly into this level here. Like, it's perfect. It's like the tick, as you can see, it's 23,450 and 25, and if I draw the line here on the bottom, it's exactly the same number. You can see 23,450 and 25, it's exactly the same number. So if you put a limit order here, you would have perfectly bottom ticked the manipulation leg. This is absolutely crazy. This movement here, you cannot tell me it's an algorithmic signature. This is not random. This is absolutely not random. And this is also not random. Yes, it's way choppy, way more choppy than this. This is way cleaner. But once you understand how to use this, it's absolutely crazy. So how do I use it? I only trade the New York Stock Exchange Open, so at 9:30. So my level, I draw them based on the last manipulation leg, okay? So as you can see, this we have non-manipulation leg because it's an accumulation on pre-markets, which happens really often. Often on pre-market we accumulate like this, and we generate sell-side and buy-side liquidity. So I'm looking way before, and the last manipulation that we had is this one. Why? Right? Because this one take all the buy-side liquidity here above. I don't care about this manipulation because it's the prior one. I only care about the last one. So this one is the main I want to focus on. Okay. Let me show you more example if I can. I think this was a great one. So this is the PM session from London. Okay. This is a great one also. So as you can see, we are on the same day, so 30th of July. And on the PM session, we had FOMC, I believe it was that. And as you can see, this is the leg of the manipulation because these legs take absolutely every liquidity here. Okay, we also take, which is important, the 2 p.m. High, which is an important high, as well as like the 10 a.m. high. So the 10 a.m. high is important, so that the 2 p.m. high is also important. So we take this high, so I draw my level from the bottom to the high of the manipulation, and then as you can see, price drops. We also take major draw on liquidity. So we took this, we took this, etc. And we had a massive SMT. I believe the ES took this and Nasdaq didn't. So we had this major SMT here, which is important because it's confirmed our bias. Because you cannot use, in my point of view, you cannot use STDV alone. You have to use it with something as SMT, the fair value gaps, inverse fair value gaps. You have to use it in a system way. You have to get a system around the STDV. Okay. So again, as you can see, price goes straight into the three levels. Okay. As you can see, if you enter here on limits, you put your stop loss on the level just below, as you want, and then you have a beautiful bottom tick movement. This, guys, is absolutely fucking crazy. I also use these levels, but as you can see, they are not really accurate because price often goes here, but sometimes go way deeper, or sometimes it only goes like this and then reverse, sometimes this reverse, sometimes this reverse. So when price comes into your levels, which are this one, you need to watch out signs that we're gonna reverse. For example, here I would have taken the trade only after we have no gaps here. Well, maybe after this change in the state here. Okay, so I would have entered maybe here, or I would have waited to get a better entry. So I would use the Fibonacci retracement to be in a discount, and I would have entered like here. Okay, because here we are in a discount, and then here we change in the state, we broke structure. Okay, we have a market structure shift. So this can be your entry. Okay, and you can put your stop whatever you want, like here or here, it depends. I would have put mine here, I think. And then you target here your TP1, last TP here. And guys, these levels are so great. I'm gonna work deeper into these levels. I will work on it. Maybe I will do another video to maybe try to explain why these levels are algorithmic levels and why do the banks and the institutions use this. I want to understand very deeper why are this level working, because this is not random. This is perfectly reaction from the levels. So I want to understand why there are reactions based off this. See you guys.